President Trump has just acknowledged that he could cause a recession here in the United States. However, he did not want to go as far as causing a depression. That's the only reason why he changed some of his policies just recently. Today, we're going to talk about that because I know a lot of people are getting a little bit ahead of themselves, thinking that this is the start of things booming. I want to be very clear. This is not that time. We're also going to go over the new inflation report from today. I want to show you some key points as well, so make sure you stick around and watch the entire video. If you have any questions regarding any of this stuff, please ask your questions down in the comment section below. But again, before I get into the update for today, I do ask one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now, let's begin. So if you said to me that our president was okay with the fact of the United States dipping into a recession, I would have thought that was crazy. But then you look at some of the policies, some of the changes that have been made. Well, look at this. It says Trump acknowledged he could cause a recession, but just didn't want a depression. This is according to the Wall Street Journal. I want to read a little bit of this to you. It says right here, President Donald Trump wanted to avoid sending the economy into a depression, through his contentious plan for tariffs. It says Trump privately said he was aware that his broad and steep plan for levies unveiled last week could tip the economy into recession, but he didn't want a depression. Now, just keep in mind, what is a recession? Well, a recession is a downturn in economic activity. Normally, we see less spending from the U.S. consumer. We see less production from businesses, and it's because there's less spending from the U.S. consumers, but there's also higher unemployment. So again, keep this in mind. There's less spending from the U.S. consumer, which usually leads to layoffs. Layoffs leads to less production. Again, that's your recession. But a depression is just a deeper toll. It's a much bigger toll on the U.S. economy. Okay? That's what President Trump didn't want. A recession, okay. Depression, not good. Now, why is this such a big deal? It's because of what happened just the other day. Okay? I want to show you this. This article says inflation eased in March, but Trump's tariffs could still bite despite a 90-day pause. Keep in mind the tariffs are not paused for 90 days. Hey, what President Trump said is that it was a universal 10%. That's even what the White House press secretary, Caroline Leavitt, said as well. It was a universal 10% tariff across the board. That's it. Okay? So, again, President Trump did say that, yes, that we're going to put a pause on this. However, 10% tariffs across the board. China is still getting hit with 125% tariff. China is a major trade partner with the United States. We are going to see inflation come back up. But look at this. This article from today says inflation rate eases to 2.4% in March, lower than expected. And core inflation is at a 4-year low. I want to read a little of this to you. Look at this right here. It says the Consumer Price Index, or the CPI, a broad measure of goods and services costs across the United States, a broad measure of goods and services costs across the U.S. economy fell a seasonally adjusted 0.1% in March, putting the 12-month inflation rate at 2.4%, down from 2.8% in February. Okay, so inflation came down. Keep in mind that for the month of April of 2024, that month of April, we still had a 0.3% inflation rate for the month of April. So when we get in, or the month of March, so in the next month, okay, so next month when we get the new report, it's going to reflect that last 0.3%. But then in 2 months, okay, keep this in mind, I believe it was April and May of 2024, we had 0% inflation, okay? Inflation was neutral, which means if once these tariffs do go into effect, or the 10% tariffs, we do see those, we are likely going to see higher inflation. So again, even though we're at 2.4% now, there's some that are expecting we will hit about 2.8 to 3% in the next 2 to 3 months. So again, inflation is going to go back up, but it's going to be fairly minimal. We're not going to see it jump to 5, 6, 7%. So that's good news there. Do want to show you this as well. It says right here, slumping energy prices help keep inflation tame, as a 6.3% drop in gasoline prices helped drive a 2.4% broader decline in the energy index. Food prices climbed by 0.4% for the month. Egg prices rose another 5.9% and were up 60.4% from a year ago. Also goes on to show shelter prices among the most stubborn components of inflation. It says increased just 0.2% in March and were up 4% on a 12-month basis, the smallest gain since November of 2021. Used vehicle prices were off 0.7%, while new vehicle costs increased just 0.1% ahead of the tariffs that are expected to hit the auto industry hard. Keep this in mind. A lot of people are thinking, you know what, I can bypass tariffs. I don't need to pay any additional increase to costs because instead of buying a new car, I'll just buy something used. Keep this in mind. When you buy a used vehicle, there's a higher chance that it needs more maintenance. Okay, so if you need parts and they're coming from another country, you have to pay tariffs on those parts that are coming into the United States. Keep that in mind. Again, 90-day pause though. So we're not seeing the big 40, 50, 60%. Okay, we're not seeing those big tariffs unless it's coming from China. So, good news there. I do want to show you some of this though. This is an article from Bloomberg. It says here are the key takeaways from the US CPI report for March. So let's go ahead and read these 5 key takeaways. First one, inflation came in notably weaker than expected for last month, with the headline CPI falling 0.1%. Thanks in part to a tumble in gasoline prices, none of the 67 forecasters in Bloomberg's survey had predicted a drop. That's good news there. The core CPI rose by 0.1%. Core means it's everything in CPI, less food and energy, at least since July, a result that was also not forecast by any surveyed economists. Declines in airfare, car insurance, used cars, and trucks and recreation contributed to the tame reading. Goes on an annual basis, core inflation ran at 2.8%, the least since the breakout in inflation in the spring of 2021. Shelter prices, long the biggest contributor to the rising cost of living, rose 4% over the last 12 months. It's the smallest gain since 2021. Keep in mind, shelter accounts for, I believe, a third of the entire CPI reading. Also goes on to say that while the March CPI predates the bulk of the tariff hikes now implemented by the Trump administration, such as the new 125% surtax on Chinese goods, the report offered some encouragement that price gains were stabilizing ahead of the trade moves. Keep this in mind as well. What is happening right now is many companies are concerned that we are headed towards a recession. So even though they could raise prices, many companies are actually keeping prices fairly stable. We're not seeing large increases because they're concerned that their customers will not be able to afford the products. And if your customers cannot afford your products and they're not buying, you're not making money, which you don't have money to pay your employees. So layoffs, downturn, and potentially closing your business. Yeah, that's kind of what we're seeing. So many businesses are aware that raising their prices could cause them more pain than just keeping things where they're at and operating with less profit margin. So we'll see. And the last one, the 2-year Treasury yield slid in reaction to the data, falling as much as 11 basis points to the lows of Thursday's session. They were down about 6 basis points to 3.85% as of 9:20 a.m. The S&P 500 futures were off about 1.7%, giving back some of the historic near 10% surge in Wednesday. Keep this in mind, because we're seeing the stock market. Okay, we've been looking at the stock market. I've been looking at the stock market all morning, and what we are seeing right now is yes, some of it's selling off. Dow's down 2.4%, S&P's down 2.9%. NASDAQ down, you can kind of see it right here. NASDAQ down 3.46. Okay, you can kind of see that. Now, why am I showing you this? Because President Trump is willing to take the United States into a recession. And he's willing to do this because if the United States dips into a recession, but the benefit is we can now impose tariffs on all these other countries, President Trump sees this as a win long term. Keep in mind, the United States, we cannot run the United States on a month-to-month basis. We just can't do it. The United States has to be run from like year to year, decade to decade. We can't just run it month to month. Like any normal business, okay, we need to be profitable this month. No, the United States is too big to do that. And President Trump knows this. President Trump has said this, that he has to look at things long term. He cannot just make a decision because we see a little bit of pain for 1 week. Essentially, that's what he did. He acknowledged that people were getting too yippy, and so that's why he made the change. Okay, that's what President Trump. And again, I'm glad we didn't go with all these tariffs right from the get-go. But based off what we're hearing, is President Trump is going to bring these back. He's going to bring back all these tariffs. However, and this is the key, and I said this the other day, I've said it for several weeks, is I don't think going from nothing to charging 30, 40, 50% tariff is the answer, because it's going to impact the American people. It's going to impact us. What he should be doing, and I think this is where some of his advisors have actually got into his head, what he should be doing is he should be slowly imposing these tariffs. Maybe on every single country, just again, universal 10%. Universal 10%. Because what we are going to do is, again, it's slowly ramping these up. And if he wants to put 125% tariff on China, yeah, go for it. Okay? Now, I was watching an interview with Kevin O'Leary, Mr. Wonderful from Shark Tank. And he was saying that 125 is nothing. He says he would charge them 400% tariffs because of what China's doing. They don't play by any rules. They're always cheating, always lying. They are stealing people's IP. And just think about that. How many times do you see a product that is made in the United States or somewhere else, great product, and okay, I'll give you an example here, where companies like Sony, there's Sony PlayStation, Microsoft with the Xbox, okay, and Nintendo, some of these companies are creating these great platforms, and they have all these games. Well, guess what? There's Chinese manufacturers, probably seen on TikTok, where they have this little kind of card, looks like a little Fire Stick or something that you plug into your computer, comes with a little controller, and you can play like 1,000, 5,000 games. These are all games that you see on Xbox, on Sony PlayStation, on the Nintendo. And guess what? It's $20. It's not $500 like the PlayStation or the Xbox. It's $20. You pay $20, you get all these games. That's what Kevin O'Leary is talking about. That China is ripping off these U.S. companies. And people are buying those goods from China because they're trying to save some money. That's what we're talking about. So again, do I think we're going to see these 125% tariffs on China stick? No. Do I think it's going to come down to 10%? No. I think it's going to be somewhere in the middle. But again, this is where we're at. President Trump is willing to take the United States into a recession, short term, because he sees a larger win down the road. So we'll see what happens. All I can tell you right now is just be aware of what is going on within our economy, because right now there's many changes. President Trump made a massive change just the other day. Everybody was excited. Stock market shot up. Everybody loved it. I loved it. But at the same time, I knew this wasn't something that was going to keep going every single day. Stock market sold off this morning. That's part of the reason why. Because people realized that the tariffs are still in effect. It's just 10%, and then the rest of it's paused for 90 days. So we'll see. But again, that's what we know as of today. So if you have any questions, please ask your questions down in the comment section below. But again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.